Hello potheads, Nick Shaheen here, looking at Canopy growth. No, just kidding about the pothead part. Maybe you are, maybe you aren't. I live in Southern California, it's totally legal here. Okay, so back to the charts. This is a crazy stock, so if somebody wants to actively trade it, they need to learn basic skills on basic charting skills, and you don't need a lot. It's basically, if you find the levels that matter, even though I can't tell you which way it's going to go, I can tell you that if this happens, then that should happen. So I can figure out, I'll put my parameters, and then I'll chase one or the other. Like right now, I do have 2 orange lines on it. I don't actively trade it. I watch it for friends. Thanks, Dave, for reminding me about this. So I haven't done a video on it in a few weeks. Can't remember when. I kind of remember what I said last time. I don't have my lines on it yet. I'm going to show you my lines, which I share with my people every day, which you can join. I do daily write-ups, and the link to the chat room is down below in the description. One of these days I'll figure it out how to pop it up in here, but so far I don't know how. Anyway, let me reset. Sometimes those lines move. Okay, so this is a 2-hour chart with my lines on it. Let's zoom out a little bit. One day would probably be too much. 240 maybe? Okay, that's better. So some things I like, some things I don't like. The predictability level I do like a lot. When I know that these yellow lines, it was crimping, I knew something was going to happen. Energy, the range went from way out there to just a tiny point right here. And I knew that this was going to happen or that was going to happen. I didn't know which, but I knew that what was going to occur, I knew the outcome of it. So I put this line way ahead of time, and look where they bounced. Right there, exactly. So it's not like I saw the future. I just use the charts. Machines are trading. They make decisions at the same levels they made decisions before. So all I have to do is just look left. Okay, so now that we guessed where it bounced immediately, it's a double bounce, in fact. So it is the floor to lose. So going forward, if they lose it, there will be consequences. Can't tell you it's going to happen, but if it happens, I expect to dip down towards 14. So if I short it, so I can short it, that's why I put that orange line. Either I buy the dip with a tight stop. So next time it comes down to orange, 15.50, I can decide, you know what, last 2 times it bounced, I'm going to buy the dip. So I'll buy the dip, but if I'm wrong, I should stop myself. What does that mean? If it makes a lower low, that assumption is wrong. I should stop myself for a little bit of loss as a trading method, not investment. If you love the stock, don't listen to me. Own it forever. If you're trading it, then this is how you trade it. Just like right now, it's going into a prior fail. Those who want to short it, they can try to short it, but know that if they go above that, they should stop themselves out because their assumption was wrong. The only reason I would short it right here is because this is the upper side of the range. Okay, so there tends to be sellers, and if not, it's going to do this. So I don't want to short it and try to defend the short and roll or whatever. I'm wrong, I'm out. And that's how it happens. So I could put an alert here, but I'm not actively trading, and I fear this set of candles that might be like the first leg might be a fake out, just like it happened here. So this, I said, my last videos, it was somewhere here, and I said I would not buy it as it approaches the green because I fear the shorting thing. So I'd be more likely to buy it for the breakout if it's more than second time. So fail, the third time they could break through, and they did, but they failed. They just filled this and said, thank you, we're done. And we kind of predicted that. We predicted that they would run out of steam somewhere around here because I put the green line. You can go back and watch the video. And I predicted there'll be a give back. Well, they gave back. They tested the neckline, but then they decided that they were going to fail anyway. Earnings came out, whatever the hell they said. They scared the bejesus out of people, or maybe ahead of the earnings. I'm not sure. It's up to you. The correction was tough. And if you were thinking of going long here and you didn't go along there, I question your resolve. Okay, so now what? Now what are these 2 blue lines? I just added these before the video. So this is the game. This is the ping pong game. Ping, 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 ping. The breakout of either of those sides will carry momentum in that direction. If they break up, expect resistances. And my guess is this is an important candle right there. It sticks out. And look left. Oh my gosh. Okay, so I just pointed this candle out of the blue, right? So let me put a line on it and tell you why it is. Where is my line? Come on. Okay, there it is. So I said this candle, what is it? 1830. So let's put a line in it. Okay, so double click it. Coordinates. Let's call it 30, 30, and 190 here. Extend it. Oops. I extended it the wrong way. Anyway, you see my point, right? 100 and 300. How about that? That'll cover everything. All right, check it out. So I pointed this candle out of the blue. And I look left. It's here, it's here, it's here, it's here, and it's here. It's been a place of contention for a long while. I'm zooming back in time. Where is it? That's the line I just put. Look at this cluster right there. Clearly this is a line the stock cares about. Whether you care about it or not, it doesn't matter. The machines love it. So on the way up, this is going to be a problem. And on the way down, it is going to, if they're coming down to it, it's going to be support. On the way up, it's going to be a problem. That's how I look for levels. So this is an important line right there. I should put an alert. And the alert would be something along the lines, very, whoops, contentious line. What is this, a 4-hour chart? 4 hours. So I will know immediately. This is a line that matters. And when I put the green thing, I put it based on an eyeball left, and it was exactly that candle right there. I promise you. Okay, so what's the risk? The risk is, first of all, extrinsic. What if the market entirely corrects? This one will fall with it regardless of how good its micro thesis is. So the macro matters to all stocks, even Apple, all of them. What's the concern for me? Too many tests of the floorboard. So test it enough times, you're going to end up with one time where they hiccup and the fall will be as big as this. Now this is like a complex head and shoulders. Clearly we'll put that stock down into single digits. Not likely to happen overnight, but you don't want to test it. You've heard of head and shoulders, right? This is a head and shoulders with more than one shoulder. I'm not saying it's coming. I'm saying that this is the risk. If they go up here and they come back down somehow and retest that same freaking floor. What if they do it on a bad day where the market is falling 5%? You think it'll hold? It's not going to hold. It's going to go down this way and then bleed down this way. The assumptions that we have now, we think that it's impossible for this to happen. It's entirely possible. I'm not calling for it, please. Some people get pissed off and they start attacking me. That's not my assumption. My assumption is I'm watching the lines and I better know the consequence of this line and the meaning of that line. So if I were to pick a nice range where I wanted to sell call spreads and put spreads, I'd sell them out here. Because likelihood is that it's going to ping pong inside this range because it's so significant to break above it and so significant to break below it. Market makers are not going to want to do that without good reason. So if I can range it, that's probably the safest trade for me as a trade. All right, so Nick signing out here. Again, fundamentals is on you. I know that if I were to invest in a pot company, this would be it. To say that for all the fans out there, because I want to leverage other people's homework. Somebody gave them billions of dollars, so they must have something. They did their due diligence. Price to sales is 20. That's not crazy. It's not cheap. It's not crazy. I don't need them to be profitable. They are trying to establish a whole sector, and it's still freaking illegal. Are you kidding me? How are they doing all of this? And it's illegal on a federal level. That's outstanding. So that's a lot of hurdles. So how about that? How about a headline about legislation? That doesn't have to break out. Just the talk of it. Change on the federal level. What if Trump loses? You know, I don't think he will, but what if he does? Then does that increase the chances of pot stocks rallying because a Democratic president might be a little more lenient on smoking dope? I was told that dope is an old word, therefore I am not an expert. So than legalizing marijuana. How about that? To me, it has good uses. My friends, I know a lot of people that swear by it in any form: CBD oil, rub, topical, edibles, whatever. I have a friend of mine who's got an eye condition. He's been using it for years, and it's been a blessing for him. So it definitely belongs somewhere. Whether it belongs on the supermarket shelves or not, that's the big debate. Because if it gets to the supermarket shelves, the ingredients, then all other companies will be free to actually get into it. And how many of those are going to come to CGC for something? So the headline matters in this case. Very few headlines matter overall. That's my thesis always. Very, very few. But in this case, the headline might matter, and it doesn't have to come out. Just the talk of it will bring business bids into the sector. So I am more likely to buy on dips or bet long on dips by selling puts or put spreads than chasing upside hope. I hope that makes sense. So let's say I wanted to own the shares for a super long time. I can sell a $14 put and hope that somebody will give me those shares at $14 put. Well, what if they don't? Then I made money out of nothing. So if I wanted to buy the shares, I would sell that put. But I caution against selling the put just to make money and not wanting to own the shares, because I've been in positions where I've sold a $10 put and the stock went to $4. Luckily they didn't give me the shares and I ended up making money on the deal, but that would have been a $6 loss. And if I did it 10 times, that's a $6,000 loss just for no reason. In this case, if I wanted to own the shares, I'd be totally okay selling a $14 put. Why? Because look, this was the May low. What year is this? What year is this? 2020. The March low was 9. Wow, how did I miss this? Man, that was an opportunity. So anywhere near 14 is a totally viable dip. So I don't want to say I hope it collapses into 14, because a lot of people are long it, but if it does collapse into 14, I'm going to be trading it long by selling puts or put spreads into it. All right, Nick signing out.